Welcome, ladies and gentlemen, to Bulls versus Bears, the Weekly Forex Forecast. My name is Dr. Gregory McLeod, and I am the CEO and founder of Elite Traders University, and we help traders become professional traders in 90 days or less using our proprietary approach. So if you have trouble with consistency and knowing when to get in, when to get out of the market, well, then Elite Traders University can help you solve your trading problem, okay? So here we go. We're going to get started momentarily. Let me go ahead and share my screen with you, and we'll get right to it. So good to be with you on this Saturday. And let's go ahead and get going. Get going. I'm going to share my screen. All right. We're going to share screen. We're going to share. It's a basic screen one. Okay. We're going to go ahead and share screen one and get it going. Okay. So this is brought to you by Elite Traders University and Weekly Forex Forecast, Bulls versus Bears. And this is where I give you an in-depth look at what I'm looking at the currency market for the upcoming week. Before we get started, I want to direct your attention to the risk disclosure on your screen to make sure you understand all the risks associated with foreign exchange trading. And I've been doing this for close to 30 years. I'm a veteran trader mentor. I traded options, futures, stocks, crypto. I'm one of the foremost authorities of short-term day trading called scalping. I spent almost 10 years as a currency analyst at one of the largest forex broker dealers in the world. And I've graduated from UCLA. I got a doctorate in Christian leadership and business. And I'm a published author. And I've trained thousands of people using my pip and run forex scalping approach. An approach that has made us millions of dollars in the market over the past 20 years. So I'm uniquely qualified to help you achieve your trading goals. I'm called the Trader Transformation Architect. I can help you transform from a mediocre trader to one who's elite. Okay. So let's go ahead and get to what we're going to look at. We're going to look at the US dollar index and the Forex majors. And we probably won't get into then we'll look at the economic calendar first. Okay. So let's go ahead and do let's get it started. All right. So I'm going to use one of my favorite tools, my top secret tool that I had created, a website that helps our traders, our elite traders, make money consistently in the market. It's called My Market Heat Map. My Market Heat Map is a trade scanner, but it's all-purpose tool, online tool for discovering opportunities in the market. One part of the My Market Heat Map is, of course, heat map itself. Green, our currency pairs are trending up. Red, they're trending down, and gray, they're moving sideways. But there's also a number of tools. There's equity heat maps, commodity heat maps, crypto heat maps, majors, all forex pairs, all instruments, global stocks. Plus, there are charts, economic calendar, financial news stream, market hours, technical screener, sentiment, market holiday hours. Also, there's videos on finding bearish and bullish trends and other bonuses. So you can go ahead and become your My Market Heat Map. In fact, if you want to try it for free, just scroll to the front, and the heat map is active during market hours. And also, there's an economic calendar on the front that you can actually access absolutely free to give you guys a helping hand in your trading. And if you like it, then you can go ahead and take advantage of our 50% off the current subscription. Okay, so let's go ahead and get in. I'm already logged in, and I'm going to go right to our economic calendar right here, and we'll start off with that. We are on Monday, October 2nd. We're starting the month of October, starting the fourth quarter. And we're going to start off with the high impact items. There are probably other news items that are also being released as well, but they're lower impact. We have for our first up, we have the HCOB manufacturing PMI final, and that's supposed to be coming out at 46, the previous number. Forecast call for 43.6, calling for a drop. And with the higher rates in the Eurozone and combination of higher inflation, it's going to be a damper on growth. So we're seeing something like stagflation. So we're seeing these numbers come down as the interest rates and higher inflation persists in the Eurozone. At 3:55, we're going to have German data, the manufacturing PMI final. and it's supposed to actually rose from 39.1 to 39.8. So even though this is not the year of flag, Germany and France are some of the largest economies in the Eurozone, accounting for a large percentage of the economic growth. Now, here is at 5 a.m., we're going to have an unemployment rate for the entire Eurozone, and it's supposed to remain stable at 6.4%. Finally, we'll get some U.S. data coming out at 10 a.m., and that's the U.S. ISM manufacturing PMI, and we're looking at a rise from 47.6 to 47.7. Okay. Now, remember, news is what's getting helps us determine what we're trading. I call it fund with flags. Okay. Looking at these, you're probably saying, I don't understand these numbers, Greg. What does it mean? And all this means is that the currency pair, the dollar, is going to be in play, and more particularly the euro versus the US dollar, because currencies are traded one versus the other. Okay. It's like a boxing match. It's like a boxer. And you want to bet on one boxer, and there's another boxer. You want to bet on the strongest boxer, right? So in the euro versus the dollar has been very strong. So we know that the euro is going to be in play. So we're not going to be looking at the Turkish South African lira or something like that, Turkish lira, South African rand. We're going to be trading or looking at pairs where the party is where the big hedge funds, multinational companies, and trading firms and brokerages are looking at placing trades. They're going to be telling their clients to look at the euro. The euro is going to be highly active in this October period with this news coming out. Okay. We also have Jay Powell speaking as well. That's going to be at 11 a.m. He is the Fed chair. He's the head of the U.S. Central Bank. And when he talks, people listen. So you probably want to be out of the market before he starts talking, because he might start saying things that could cause the dollar to strengthen, or he might slip up and say something and cause things to drop. So you want to put on your ears, tune up your ears, perk up your ears when you hear Jay Powell taking the stand to speak. Okay. He's very hawkish. He wants to see a strong dollar. He wants to see higher rates because he thinks higher interest rates are a way to fight inflation. Okay. So usually when he talks, it's usually bullish for the US dollar and bearish for everything else. Okay. So keep that in mind. 11:30 p.m., we're going to have the RBA interest rate decision, and that's going to be front and center. This widely expected for them to keep rates unchanged at 4.1%. And given that the U.S. dollar or the U.S. Interest rate here is nearing between a range of 5.25, 5.2. So the differential favors the U.S. dollar. Okay. So when I talk about the carry trade, that the carry trade actually favors the U.S. dollars, would you want to put your money in a bank that pays 4.1%? Or you want to put your money in a bank that pays 5.25%. And if you're smart, you want to put your money in a bank that has a higher interest rate. So there's an arbitrage opportunity here. People can borrow at 4.1 in Australia and put their money in a US bank and get 5.25 and keep a 1.15 differential, right? So what happens is usually markets will trend in the direction of this carry trade, or in the direction of this interest rate bias. Okay, so if they keep rates unchanged and the U.S. dollar is the interest rate for the U.S. is higher, well then we might see the Australian dollar actually sell off, and we're going to take a look at some charts to see if it's setting up that way, and that could be a major trading opportunity, which I'm going to be looking at. Remember, none of the trades I'm telling you about or setups are a recommendation of any sort. This is all purely for education and entertainment purposes only. Consult your financial professional for recommendations and guidance. Okay. We'll move on to Tuesday, October 3rd. We have the Swiss flag. It's funded with flags. I tell you, it's 2:30 a.m. And if you're up, CPI, Consumer Price Index. And when I tell you, when you see the I, it's an inflation number, right? They say it's an index, but we're looking at inflation. And in the Swiss economy, is a small economy, so it may not be that. We'll look at the Swiss francs, but 106.4. They're looking at CPI to rise to 106.7, and that could put pressure on the SNB, the Swiss National Bank, to raise rates, and could cause the Swiss franc to rise against other currencies. Probably not against the dollar so much, but that could happen. 10 a.m. we're going to have U.S. data, the 10 a.m. news cycle. Usually, U.S. news is released at either 8:30 a.m. Eastern time or 8:30 a.m. or 10. Okay, so this is the JOLTS job openings, and this is not Jolt. It reminds me of Jolt Cola. If you guys remember old Jolt Cola, twice the sugar, twice the caffeine. I think it was like the first energy drink next to Mountain Dew, right? If we're driving cross country or something, you usually get a can of Jolt Cola. You probably still find it at those little those convenience stores on the highway. But anyway, the JOLTS is a job opening. JOLTS is they survey job openings, almost like the Non-Farm Payroll and ADP. And the job openings are supposed to almost flat, but maybe rising a little bit from 8.827 to 8.83. That's very, so that if that number comes out of more than higher than expected, then that could cause the dollar to rally, because the Fed will say, look, there's too many people with jobs, we have to hike rates some more. And so we move. So that could possibly happen. Now for US, when I see a US flag, I can look at the dollar yen, which is a very good pair to look at. I'm also going to look at the euro. Okay. So, we have another interest rate decision at 9 p.m. We have RBNZ, which stands for the Reserve Bank of New Zealand, and this is their interest rate decision. And they're widely expected to keep rates unchanged as well, from 5.5%. Keeping it steady at 5.5%, right? If they surprise hike, that could give a short-term boost to the New Zealand dollar. New Zealand dollar has been trending lower along with the Australian dollar due to some economic softness in China. We saw like one of a large real estate company, Evergrande, their CEO is placed under police or house arrest, and so that is weighing down on the China, the Asia economies, and those Asian economies are very, very influential to the economies in New Zealand and Australia. China is the largest trading partner of New Zealand and Australia, and so if China's economy catches a cold, well then New Zealand and Australia will catch COVID. Okay, so that could send the New Zealand dollar lower. Okay, moving right along for October, October 4th, which is the twins' birthday. Happy birthday, Kira and Krista. It's also National Taco Day as well, October 4th. We have a French data coming out. That's HCOB Services PMI, Purchasing Managers Index final. It's supposed to drop from 46 to 43.9, which could put some pressure on the euro. We'll see. The euro did a little bit of a U-turn on September 29th. We had like a full moon reversal on that Thursday night, Friday, and we saw a little bit of a pop, as it came up for air. It was being held down so long. Remember, this is non-farm payroll week. So all eyes will be on the U.S. job numbers. Non-farm payroll is one of the most widely watched economic indicators in the world. And reason is because the U.S. is the largest economy in the world, and the employment picture. We buy a lot of our imports. We buy a lot of imports, and a lot of countries export to the United States. So the condition of the economy, of the U.S. economy, is plays a pivotal role in the lives of traders and companies in other countries who send products, goods, and services to the United States. Okay, So that's why they watch the job number. But another job number comes out before, and that's called ADP, employment change. And that usually, it's a private company, ADP. Is not a government company. In fact, ADP, when I worked for the brokerage, ADP made our paychecks, right? So you would think they would have a more accurate number because it's very simple. If people have paychecks, you just count how many paychecks you have and how many people have a job, right? And if they don't have a job, then they wouldn't get a paycheck. However, remember, there's more than one company, Paychex, ADP, there's other companies out there. Also, banks do their own private payroll as well. And you have a number of government workers who are not on ADP's payroll. They're not in that, they're not serviced by ADP either. So ADP only represents a portion of the jobs out there. They might draw us for some other data, but it used to be a good foreshadowing to see what non-farm payroll will be like on Friday. Okay, so at 8:15 a.m. So it's not at 8:30, it's not at 10. It bucks the news cycle of the U.S. It comes out at 8:15, kind of splits the difference, right? Comes out at lower 177,000 was the previous number. They're looking for a drop to 160. And that actually would be bearish for the US dollar, would take the pressure off the Fed to keep rates high in order to reduce the number of slow down job growth in order to lower prices, okay? 10 a.m., we have ISM Services PMI, the Purchasing Managers Index at 10 a.m. It's supposed to fall from 54.5 to 53.6. Right? Softer economic data will actually be bad news for the US dollar, but good news for the stock market and good news for risk assets and other currencies like the Australian dollar, New Zealand dollar, pound dollar, euro dollar. Okay. And if you join my group at the Forex Cash Machine or any of my Facebook groups, we talk about why is this so? Why is this so counterintuitive, right? At 8:30, we're going to have Australia balance of trade, and that's supposed to rise from 8.039 billion to 9 billion. Okay, and that might give some support to Australian dollar. And that in the news for October 4th. Thursday, October 5th, we have German balance of trade. That's supposed to drop from 15.9 billion to 15.8 billion. And then at 8:30 a.m., we have U.S. initial jobless claims. Previous number was 204, is expected to rise to 210. If that number is higher, that would make the U.S. dollar weaker, but it will send the stock indices higher and also send risk assets higher as well. Okay, so good means bad, bad means good. We're in a really strange world right now, right? 10 a.m. we also have Canadian data. We have the Ivy PMI supposed to rise actually drop from 53.5 to 49.6, right? And Swiss unemployment rate supposed to be unchanged at 2%. And then we have average hourly. There are big U.S. data. The average hourly earnings month on month supposed to rise from 0.2 to 0.3. Rising wages, the Fed doesn't like that because that's inflationary. Because if you pay McDonald's workers $25 an hour, then the burger goes up in price and everything else goes up in price too. So it's good for the worker, but the Fed looks at it as a negative when people make more money. Okay, non-farm payrolls, that's the big number we're all looking forward to see on Friday, October 6th. And the number is supposed to, the previous number was 187,000 jobs, and we're expecting a drop to 163,000 jobs. That's what's the forecasts call for. However, if it comes lower than that, like maybe like 110, or if it comes in lower, I mean, this is our pandemic low, and then we've been moving sideways for quite a bit. Right? Yeah, so we've been kind of like moving sideways for quite a bit on that. But the lower number would take the pressure off the Fed to keep hiking rates. and they would probably want to maybe pause or slow down the hikes because they're trying to engineer a soft landing. If they have too many jobs lost or not created, if this is like zero, well, guess what? They're over tightening, and they need to maybe back some of those cuts out with maybe those raise hikes out with a rate cut, right? So as this number is trending down, this is what the Fed is looking at. And if the Fed says, okay, we're at we came at 120, 120 handle would probably cause them to take their foot off the gas and allow rates to drop. And then you would see the stock markets rally, would see Bitcoin rally, would see gold rally, would see the NASDAQ, S&P, everything rally if we get a bad non-farm payroll number, right? And I think we probably will. I think they'll probably engineer one. If they don't get one, they'll probably just pull one out. Why? It's the fourth quarter, and guess what? The guy with the guy with the 4 kids and wants to get the GI Joe with the kung fu grip for Christmas. He needs that Christmas bonus, so we may see the engineered number for non-farm payrolls, and then you'll see a revision later on. But that's just my 2 pips worth. It's regular conspiracy theories. No, I'm not. I'm just saying that it's October, going October, and we got people want to get their bonus in the year bonuses, and they need the stock market to rally, right? And so we need a low number. We need fewer people getting jobs. I know, isn't it kind of a weird thing to say? Unemployment rate from 3.8 to coming 3.7. We come in like a 3.6 or 3.5. It's a done deal, baby. If it ticks higher, then we might see if we see a higher number too on non-farm payroll, if we see 187 or 190 or 200, we could see a collapse in the stock market, right? It'd just be, so this is very key, right? Bad means good. Bad means good. I don't know. I'll shake my head on that. But I'm in the NFP. So these, we're going to watch these numbers, right? Canada employment change, I know, is like coming after. It's like you had the main event, the main act, and now you've got the opening band coming out after the main event, right? It's like, who cares, right? But still, there's opportunities to trade dollar CAD, Swiss CAD, yen. Unemployment change, we see a drop from 39.9, almost 40,000 down to 17. Unemployment rate supposed to go up from 5.5 to 5.6. Participation rate supposed to actually rise from 65.5 to 65.9. Okay, so that is it for that, and then we go into some Australian data for October 9th. But so that is the economic picture. Let's see, I know you guys are like, where's the technicals, Greg? Okay. So I hope you, was that useful? Was that helpful? Let me know in the chat box. We're actually streaming live on YouTube. And that way the recording is already there. I don't have to like download the recording or have Jonathan do it. It goes straight into YouTube, and then we can get it out to you right away for those of you who just missed or just tuned in. Again, my name is Dr. Greg McLeod, and this is Bulls versus Bears, the live streaming version, right? So make sure you like, thumbs up, subscribe. If you enjoyed this, we are going to be launching a new service in the next few days. It's a live trading service. So it's been a wonderful addition. I got my master trader, Jamie. Cut the Rope. He goes by Cut the Rope. We're both going to be doing a live streaming of trading. I've had many people say that, if they had only had someone to trade with, someone who knew more than they knew, someone who understood the market, who could give them like some confidence and maybe some, while in the middle of the market, having someone to talk to or someone to watch, that would give them the confidence that they would go in the trade. I had one student, it's very unfortunate because he was doing so well, and he had some personal problems, and he says, I just need someone to trade along with, the hours that you trade. I don't trade, but it's going to be New York session. It'll be a New York session for 2 hours from 8 a.m. Eastern time to 10 a.m. And we are going to have 3 levels of service. We're going to have a general service where people can trade with us for an hour. They'll be in a Facebook group and they can don't be able to ask any questions or post. They'll have to, just, and it'll be a little bit delayed because, we don't have so much space in the Zoom room, but we have a VIP room. We're going to have a VIP where you can actually listen to questions by our platinum members or that are going to be asking questions, interacting with us. And those platinum members will also get an extra hour of service, 2 hours of trading with me. And then we're going to have our VIP, and our VIP people are going to be there for 2 hours as well. We're going to have a little bit of mindset coaching. We're going to be able to, you're going to be able to ask it as a platinum member. You'll be able to ask us questions and interact with us in the Zoom room. VIP and platinum will be in the Zoom room with us, where there won't be a delay. Usually there's going to be like a 3-second or 4-second delay in the Facebook group when we stream to that. But those in the Zoom room will be in at real time. So you'll have a choice of service, 3 levels of service, and we'll do that Tuesday, Wednesday, and Thursday. And then we'll also have a bonus session the first Friday, like we have a first Friday for non-farm payroll. We'll have a Friday session as well. And there'll be a room be led by myself and cut the rope. So I'm looking forward for that. If you are interested in that, give me an email, send me an email, greg@elitetradersu.com. If you're interested in trading live and being part of our service, we might do maybe a 3-day trial of some sort to see how that actually works. And if we have enough interest in it, well, then we'll continue it. And if not, then we'll just continue making all the money ourselves. Okay. Anyway, let's get right to it. And let's move on to the technicals. All right. We're going to start with the US dollar index. US dollar index is a basket of currencies versus the US dollar. And you go, but Greg, it says DXY. That's not USD. They're the same thing. Okay. USD and DXY. This is the index of bunch of currencies versus US dollar. And I'm using Heikin Ashi candles just to give us a nice smooth color of trend. Green means we're in an uptrend. Red means we're in a downtrend. So I keep it really simple, stupid color coded simple. That's how I teach people how to trade. Nothing complicated. And you can see that where we changed color, we made money, right? That's part of the power trade system. And we have our power trade boot camp, which is going to be going on as concurrently as well. And so if you're interested about the Power Trade Bootcamp, you can go to our website, elitetradersuniversity.com, and find out more about how to profit by colors. You've heard of paint by numbers, profit by colors. Okay. All right. Moving right along. DXY, if we can see higher highs and higher lows, we have an uptrend, right? We have we're making these higher highs and higher lows. We had a low back here on July 3rd, 2023, and we bounced, and then we have another uptrend, a little bit faster, right? You can say, well, Greg, we have a downtrend too. Yeah, but we kind of broke that repeatedly to the downside. We just broke, and we have a color change. And so now we're looking for the bullish moves in the market. Look at your weekly chart. We can see that stacks of green candles, and we don't use regular candlesticks anymore. I know a lot of traders use them, but they're very distracting. All that bullish engulfing, spinning top, blah, 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 blah. Got rid of all that. Green and red. We keep it really simple at ETU. Very simple. You can enroll your 6th grader in our class, and they'll probably make more money than you because we keep it really simple. Okay. We have higher highs, higher lows above the 10 and 20 moving average. That's an uptrend. Bulls versus bears. The dollar is very, very strong, right? We go to a daily chart and we can see a smooth uptrend. So bulls versus bears, we are bullish. The dollar. So And everything, most of the things that we trade are versus the dollar, right? Look at our major currency pairs. We're going to look at, we do our first thing, we do have some Australian news. So we're going to, before we do that, we want to look at the euro. The euro is the anti-dollar, okay? The anti-dollar. They created the euro back in 1999. I mean, they actually worked on the European currency unit and some other stuff. So it's been an experiment, and they finally released it January 1st, 1999. So it's a Capricorn, right? If you're in that astrology stuff. But they released it January 1st and at 1999 to a fanfare. And said, this is going to be the replacement of the US dollar, the euro. And then as soon as it came out, it dropped, right? But it's supposed to provide another asset, another choice for people to look at. So you can go all the way back to 2000 when can you imagine being around when a currency gets birthed, right? I mean, again, the European currency unit, you can see that before 1999, it still traded. They projected everything back based on taking the value of all the currencies that used to exist, the lira and the Deutsche Mark and the peseta and all these other currencies, right? And so, I mean, there's our launch date of the euro, 1999. Yay! Oh, snap! Oh, boom! And then they intervened. The EC, European Central Bank, intervened and started buying the currency and started to manipulate to get it back up. And then did a U-turn. Oh, we're back, right? And then they're like going, oh, wow, our currency is really strong. This is really bad, right? Because our exports are now people don't want to buy your products because your currency is too high. So guess what? Oh, sell it off, right? And we've been in this downtrend for a while, right? And then we rallied from these lows here, right? So to where we are right now. You guys, lows about 95, not too long ago. Back in our low we hit was back on September 28th, 2022. We had a low of 95, almost like a 20-year low, right? And then we rallied off that very sharply, and then we got back up to about the 113 area, found some resistance there, and just in time for Jerome Powell to start hiking interest rates that have been historically low. And so there we go. So this is so now we've been downtrending pretty solidly from after hitting a high on January 18th, 2023, about 112.74. We just kept trending down. However, we're probably running on into some support, right? Some Fibonacci support. The 38% retracement at 106.04. And then toying around this 106 area. And there's lots of support in this area, in this zone as well. You can see all the wicks down below in this area, right? So we might get a little bit of a rebound here. Maybe this persists. We can't seem to break down below this 104.93 area. And so we might come up for air for a little bit. We're looking at our daily chart. Let's go down to a 4-hour, and you can see that we might get we got a little bit of a pullback, a little bit of a push higher, right? So bulls versus bears, I am kind of a short-term bearish, medium-term up, because we've got what we call a seasonal pattern working on right now. Seasonal pattern in that, the seasonal pattern for September was dollar strength. The dollar has been strong for the past six Septembers, for 6 years. Dollar has been strong, and it didn't disappoint because it was a very bad month for the euro. However, we have some profit taking. The people who were short the euro are going to start taking profit, and we might see a profit taking rise in the euro. And we probably could see a move back toward the 106, 60 area, maybe 107, right? 107 may be our our rallying cry for the euro. So we're in tricky territory here. October is it can be a depending on the cycle, either early October or middle October. Might get one more push down, so short-term push, and maybe one more push higher going into the end of the year. And if they wind up hiking rates in November, or if they skip or they raise rates in November, then we could see maybe another little short-term pullback in the euro, right? So we put a nice bottom here. We might see a little bit of a pullback short term, and then a rally along this trend line. So I'm cautiously bullish, but I'm short-term bearish, and I'm looking for a place to short, right? And we have a lot of data coming out too, a lot of including non-farm payroll, and it really hangs on those non-farm payrolls. Those payrolls come out worse than expected. Well, then we could see this shoot up much higher, right? Because the dollar would, maybe it's the end. We're closer to the end of a rate hike cycle than the beginning, and so this would mean that this comes up for air. We start moving higher, maybe like I said, back to maybe 107.35 or so, right? All right. I know it's like saying, well, no, Greg, lower swing lows and lower swing highs. This is a downtrend. I go, yeah, this is where you guys get screwed. This is where, we had, the different 3 drives to a bottom, and now we're reversing, and people are taking profits. Okay. So I didn't see any UK data up, so I'm not going to bring that up, but I am going to bring the Australian dollar up because we do have the RBA Rate Announcement, and that's going to be huge. Right, I'm going to go right to our monthly chart, and we can see that we are doing the same kind of thing with the Australian dollar. We get these long wicks, and buyers are stepping in. When we get priced down here, the bears are high-pawing each other, and they're really excited, and then boom, buyers step in. So we're working on we have higher lows, right? In fact, we have 2 points making a line. I did a recent video on drawing trend lines, how to draw trend lines. And I told you, in that video, I talked about how you have 2 points to make a line. This is like geometry 101, right? 2 points to make a line. This is the first test of the line created by these 2 points, point 1 and point 2, and this is the baby, right? So if this test works, then we should see a bounce from this area higher, right? And so that is, so at turning points, the trend is, it can get kind of wonky, right? So we're making higher lows, and you can say, well, Greg, we're also making lower highs, right? We're also making some lower highs as well. We have some lower highs, and so I'm going to reconnect these like this, and then maybe so we can see a break of this trend line, and that could be, our downward supply line. We have a rising demand, downward supply forming a triangle, and we look for a break of this area, this 64.41. Maybe we come up to like maybe not that high, probably like 68.94, right? I'm looking at monthly. Let's look at those lines. Let's pull it back, and you can see we're coming on support. Price, look how it decelerated. We had strong moves down, and as we got close to this trend line, we can see that the candles are getting smaller and smaller. That means usually price has to slow down before it changes direction, right? And so we can see that already we're finding some support coming in here in this the 63.53 area, holding repeatedly, multiple bottoms. That's usually a sign that we're going to see some type of move higher. All right. So I am short-term bearish, like maybe a day bearish, but I'm actually cautiously bullish about Aussie dollar. All right. Even though we have a differential, we have a seasonal pattern The break, though, the short-term bearishness could take us down to 61, 64 on the daily chart. So we could get a move down, maybe double bottom here and then move higher, right? So that's what I'm saying. Lots of congestion in that area right there. All right, and we do have the RBNZ, the Reserve Bank of New Zealand has a rate announcement as well, and these rate announcements may not be too important because non-farm payroll is coming up, and nobody wants to be on the wrong side of non-farm payroll. So this is where our scalping strategy comes in and does really well, because usually what the market makers and operators will do is they will hold price within a band, and they won't get outside that band until there's a fundamental change or a piece of data which changes their thesis, right? So, the thesis is we are nearing the end of our rate hike cycle. And if we are, well, then other assets should rally against the US dollar. And so that is, the unwind thesis that may be going on right now, right? So you see we're in this range of a monthly chart, and we've made a slightly higher low. We got a little bounce that we had, right? If that holds, or do we break down to 55.43? That's the decision that we will wait on, right? And again, we might see some gyrations with the central bank, but non-farm payroll will probably trump. Excuse the play on words. Will trump the move of anything that central banks are doing. Non-farm payroll holds the upper hand there, right? And again, I think we come out with a worse than expected number. But if we don't, then we could see a complete crash down to this area here, right? So we might continue to range bound. So even here, I am cautiously bullish in the medium term, but I am short-term bearish. I think we get maybe another shot down, flushing out any bulls that we had toward the end of September. Right. We might see. In fact, might see this little pullback here. All right. So New Zealand dollar. I also want to look at the USD JPY. It's a currency that been benefiting massively from the rate hikes. Given that even though Japan has raised rates, it's still nowhere near what the rest of the Western world is doing. And we can remove all drawings here, and then we can see we have a very, very strong uptrend. Japan had near zero interest rates for a really long time, and we can see that our previous. We go back to a week. Yeah. So our old high, I'm thinking that we're going to target the old high on dollar yen, 52.01, and that's probably about another 180 pips away. Right? 180 up. And so we just keep trending up from that dip we had on July 20th. And many people were saying this is the end of low rates for Japan. It's like, yeah, right. Not when you have a country that is like 200% GDP, debt to GDP ratio. They cannot afford to allow rates to go up in Japan. We would have a major meltdown in the number 3 economy if something like that happened, right? They painted themselves in a box, but might find a way of engineering their way out, right? So dollar yen, I am bullish. Maybe short-term bearish, maybe for a day, but the rest of the week bullish, right? now let's go ahead and move on to, so we did non-farm payroll, we did that as well. I wanted to go the S&P 500, SPX 500. And then we take a quick look there. I'm going to use skilling and monthly chart, and remove all drawings. And let's take a quick gander there, and we can see that similarly to the Japanese yen, we've got these huge moving. Okay, skilling doesn't have a lot of data here. Okay, all right, we'll use something else then. Usually you can use one that gives you a good amount of data, would be OMO, right? There we go. Ooh, all drawings. All right. So there we go. So now we can go back. We can see some history. Don't know much about history. There we go. We got the big wide view, just like I had at the Red Canyon. I was at Red Canyon this morning, and it was huge. The mountains, beautiful. So we do have an uptrend. We got a little bit of a pullback. It doesn't look like much on a monthly chart, but I tell you, if you were in it in one of the stocks or in indices, it was that's huge, right? Let's go to a weekly chart, and you can see that after rallying to a high of about 46.07, got a three-wave correction against the trend. And usually after a three-wave correction, we get a move higher. So I'm looking at daily chart, and we can see that the rate of change down was slowing down. So we went strong red, down, 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 down. Now we're slowing, and now we're getting small doji indecisions, spinning tops there. And then we might see a move back up, right? As long as that low holds around the 42.37 area, if we can hold that as support, that could be our touch point where we might see a rise, a move back up to our old highs, right? So I am going to be short-term bearish, but maybe in the next couple of days, maybe going to non-farm payroll, we start to rally, because Clarence speaks, somebody's got the envelope, and someone has the data, and they're all, getting ready to jump on this bandwagon north, right? Like I said, if something happens and that number comes out higher than expected, we can see this barrier break, and then we can see maybe a drop down to the 40-42 area, right? That would be something major, but it wouldn't be something to fear, because it would still be within a proper correction or pullback, where it would be a bargain opportunity, right? So because we stopped at the 38s at 41.80, so we actually could come back down to this area here, this 41.80 area, right? And it would still, it might flush all the bulls out and scare everyone out. But then, this will be a nice little pickup to move higher, right? We can we can take a Fibonacci expansion, and just to see if we hit measurement targets. The 100% expansion at 42.42 hit exactly, and the 127 is at 41.65, and the 1.618 expansion, you can't see it because it's blue, but it actually comes in right at 40.64. And we get a nice washout down to here, then that would be a very good position to get long for a flight back up to some old highs, back up to this green line, right? So that is something to look at. Okay. So that's going to be it for me for Bulls versus Bears Weekly Forex Forecast. I hope you enjoyed it. I hope it was that you got some insights. Maybe you've I see, Arnie's there. I see Arnie, and then I see Jeff. Hey Jeff, I sent your book on the way. I'll give you the tracking number too, right? And I see Dirk I've got your hat, your Pip and Run hats on the way too as well. Okay. Thanks, guys, for coming in. Did you show the heat map? Yeah, I did. Yeah. Did you come late? Yeah, this is our heat map. It's gray. There's nothing really going on right now. It's the weekend. Arnie and Jeff are my top students, and nice to see them doing their homework on this weekend as well. And guys, I wish you all the best. And remember, you can come over to EliteTradersUniversity.com and you can get some free material, some free help. We have an income boost blueprint ebook to help you in your trading. It's a good way to learn about the $5.1 trillion a day. It's really like $6.1 trillion a day market. You can also come over and get a free master class. You can reserve your spot. It's 45 minutes to an hour. It tells you about who we've helped, how we've helped you, and then also tell you about how our system actually works. So you want to claim your spot, click that. You want to click that and go ahead and reserve your spot right there at the Elite Traders University website as well, right? You also can check our Forex Foundations Power Trade course. It's a boot camp. It's 6 weeks. And but if you want more and you want mentorship for a year working with me like Arnie and Jeff, well, then you want to apply. We have a few spots available, and I'm going to move this out of the way. You can click the apply button. Click apply, change your trading and change your life. And you just complete this brief survey, choose the time that's available there, and then you can go ahead and join. Again, it's my pleasure to be of service to you and to see you on the other side, to see you on one of these beaches. And I wish you all the best. Peace and pips. This is Dr. Greg McLeod signing out. Bye-bye.